We're back with an upheaval at Southwest Airlines. Today we learned 6 longtime board members will be stepping down in the next couple months, including former CEO Gary Kelly. It's the latest change at the Dallas-based airline since an activist investor acquired a larger stake in the company. Janelle Fort covers the airline industry for WFAA and joins us live from Dallas Love Field. Yesterday you alerted us that a transformation was imminent, and I think, Janelle, now we're wondering, what does all this mean for travelers?
Well, it means that they need to brace themselves for some big changes and be ready for shakeups to some of the staples of Southwest culture. We already know that they're going to get rid of the open seating policy. They say they're going to retrofit their fleet to offer business class like extra legroom seating for an upcharge, and they're going to start red-eye flights, but it may not stop there. Two big things that set it apart from other airlines are the 2 free checked bags and the no change fee policy, which investors may want on the chopping block because they say they're missed opportunities to profit, Chris.
And, for decades, some of these policies were just synonymous with the airline in terms of open bag, open seating. Why all of these changes in happening so quickly?
Investors and stock prices. Elliott Management says that part of the reason that Southwest isn't the big profit machine that it once was is because Southwest hasn't evolved its business model to keep up with the changing airline industry. Elliott Management is what's called an activist investor. Essentially, they're a hedge fund that buys significant stock in public companies to change how they're run. They recently did this at Starbucks, and now they're targeting Southwest because they believe that the airline is leaving money on the table. Southwest had a big meeting with Elliott Management yesterday to try and convince the firm not to move forward with plans to oust the majority of the company's top leadership. The airline offered up partial concessions to the firm's demands. CEO Bob Jordan will stay for now. Board director Gary Kelly will retire next year, and 6 board members will leave in November, and Elliott could potentially handpick their replacements.
So I think the real issue is they're not a troubled carrier. This is not a financially troubled carrier. Their stock price hadn't gone up as much as some people might expect, but they're a financially sound carrier. Can they be a more sound carrier if they start to look at different ways of doing business? And I think this Elliott thing might be a catalyst for it, even though Elliott hasn't provided much in that way in terms of advice yet.
Now, I reached out to Elliott. Their spokesperson told me this is by no means a compromise, but they say they are, quote, happy that the Southwest board is beginning to recognize the degree of change that will be required. But they also signaled that the pressure may not be over yet. And we also reached out to Southwest. They sent me a press release saying that they intend to continue their constructive engagement with Elliott towards a collaborative resolution in the near term. So a lot to keep an eye out on for the Dallas-based airline. Back to you.
Yeah, Sir Elliott certainly signaling that this will not be the end of their effort to induce changes there at the airline. Janelle, thanks so much for providing all that context. Thank you.